Good afternoon and welcome to NYFP. This afternoon I'm joined by Polcari of ICAP. Hi Kenny, thanks for joining me today.
Thanks for having me. How are you?
Well, we're here at the end of a very short week here in the U.S. and the jobs report came in worse than expected. First of all, were you surprised by the numbers?
I was surprised by the size of the number. 18,000 was a huge miss, considering that the consensus had been 100,000. Yesterday they started to raise that number even a little bit more. I expected a miss, but not necessarily that big. So I think that's the real, honestly, and clearly the real surprise was that the number based on ADP's number yesterday, which was double what they were expecting, so created all this excitement for a really positive number today. So the fact that it was 18,000 jobs was yes, really a disaster in terms of what the expectation was.
Well, all this week we've been seeing pretty light volume in terms of the equity markets, but in terms of reaction, we're seeing the major indexes all lower by at least 1%. So what technical levels are you watching right now?
I think you have to look immediately on the S&P. You have to look at 1325, and we're not that far away from it at the moment. If we slice through 1325, you would look for the 50-day moving average, which had been resistance for a while, which is now becoming support. So that would be the 1311, 1312 level at the moment. I think what we're going to see is the market probably get weaker into the end of the day because it's the weekend and this news is kind of negative and there's nothing that's really positive today. So I think what you might see is a little bit more selling pressure coming into the end of the day. And I think there's a real possibility that we actually test 1325 today. We're only 3 or 4 points away from it.
Okay, Kenny, well, before we head into the weekend, next week does bring earnings with Monday bringing Alcoa's results. What are your expectations for those?
It's going to be all about, certainly for the next 3 weeks, it's going to be all about earnings. And, you know, the analysts have been kind of preparing people for a better than expected earnings season. What's interesting is that we've seen over the last couple of weeks, some of these earnings estimates have been tweaked lower to reflect the fact that the second quarter was tougher. We all understand that. So you have to be careful on how they spin it, because they're going to take these lower estimates and then they're going to come out with a number and it's going to beat the estimate. They're going to say, look at this, we beat the estimate. Well, in fact, 3 weeks ago, the estimate was 5 cents higher. And so did you really beat it? Is it really rhetoric? So you have to really pay attention. I think what people are really going to watch, though, is how a CEO is going to present it going forward. What are they really going to say about the next 6 months? Of what their business is going to look like, what they suggest the economy is going to do, and how that's going to affect their business, especially after the news we had today. And quite honestly, no one should be surprised, because the news over the last 6 or 7 weeks has not been off the charts great, rah, here we go.
Well, Kenny, as always, thank you so much for your time and thanks for all your insight today.
You're welcome. Thanks for having me.